Okay, in today's video, we're going to be talking about a setup that I saw on ES. Okay, so we're going to be talking about ES today. So real briefly, I'm going to navigate over to my free Discord chat. Link to that chat will be in the video description. 100% free. 100% free, doesn't cost you a dime to join that chat. You just click that link and you're in, right? So let's go over to that real quick because I want to show you something. I said right here, you can see I posted this on 3/27/2023, so a couple days ago. Let's read what I said. I said, ES, eyes on this 4-hour bullish order block. That's what I have noted right there with the horizontal line. See that? Look at my cursor. I said, yes, eyes on this 4-hour bullish order block. You also have a fair value, or you also have your fair value gap confirmation on that push up. There's your fair value gap. Once price trades down into a discount, test that level. Keep an eye out for a lower time frame reaction, aka a shift in market structure. Then you can look for upside objectives, right? So I posted that chart on the 27th. So you can see we had a perfect, it doesn't get any cleaner than that. Just perfect respect for that level, that bullish order block, right? Price came down, cleaned out this sell side. It completely rebalanced this portion of price action and then rocketed up. So we're going to break this down. Why is this a setup? What did I mean when I said I wanted to see price trade down to a discount? Let's start there. Well, let's grab our Fibonacci because it's best if you wait for price to trade down into, in this case, since we're looking for buys, the market structure of this thing, overall, the daily market structure on it, bullish. Okay, it's bullish. We're trading with that higher time frame trend. And then what we're going to do is we're going to take this low right here and we're going to take it to the high of that price rally. Was that in a discount on that pullback? This is 50%. Look at my cursor and then look at that Fibonacci. There's 50%. See how price traded down below 50% equilibrium of that price range? What is that? That's a discount marketplace. So price on this leg lower right here, it traded lower into a discount marketplace. Okay. It completely rebalanced that price action on that shift higher right there. And we tested our 4-hour bullish order block. Okay, see this right here. Why did I mark the body? Because that's where the bulk of the volume is. So we got this bullish order block right here. Price came down and then perfect bounce off that level. So if we're playing that higher time frame structure, so there's a couple ways you could have played this. Okay, there's nothing wrong with taking it off the 4-hour chart. If you wanted to play that 4-hour chart right there, there is nothing wrong with that. You could have played that. And let's say if you did, let's say you didn't want to utilize a smaller time frame. Say you just wanted to play it off the higher time frame structure. Where would you keep your stop on something like this if you were to grab it down into that, for example? Well, a good place for a stop if you're playing the 4-hour market structure would be right here underneath these lows, okay? Because that's the low of the fair value gap, and it's also the low of this price swing right here. Okay, if price was to break below that point, that would invalidate that market structure and you would be wrong. And then your profit target, where could that be? Good place would be these highs right here. Okay, because again, we're playing the higher time frame market structure and we got buy stops right here, buy side liquidity. So that's just from first glance at it. I haven't put a risk reward tool on it, but it's probably about 1-to-1. It's about 1-to-1 risk reward on that, just from the looks of it. So you could have played that. It would definitely, it's not like no home run play. You're not slamming it out of the park with a 1-to-1, but hey, that's a setup and that's a nice looking setup. Now we're going to utilize some different time frames. So this is basically right out of ICT's 2022 mentorship. I think a lot of you that follow me, you've watched that mentorship. So this is like a picture perfect setup from that. Okay. So remember so far what we talked about. We traded down into a higher time frame discount. We tested a higher time frame level of support. We rebalanced that price action. And if you remember from his mentorship, what do we look for next? What do we look for next? So you can see on this push right here, did we take out our liquidity? Yep, we took out those sell stops right there. See that? So we took out that swing low and boom, we took out those sell stops. We rebalanced that price action. Okay. And we tested our higher time frame level. So what do we look for next if we're talking about his mentorship? If we're talking about the ICT 2022 mentorship, what do we do next? We utilize our smaller time frames. So let's go to a 5-minute chart. All right, here we are displayed on the 5-minute chart now. Here's that leg down into that level. We're going to zoom in. Okay, do we got to set up here? Do we got to set up here on the 5-minute chart? Because we got our higher time frame level. Here's our higher time frame level just displayed on a 5-minute now. We pull back into a discount. And remember, we're playing this higher time frame structure here. So this is your draw on liquidity. Okay, these buy stops, these It's also worth noting that we got relative equal highs right there, which is really nice to see as well. Price typically, this is one for the notes, price typically doesn't like to leave really clean highs like that. It wants to take it out more times than not. And whenever we have the structure in our favor, when we have all these things lining up, it's very high probability. So we're utilizing our smaller time frame now. Why? Because we want that confirmation. We want to minimize risk, right? We want to minimize risk. We want to maximize reward. And if you recall his mentorship and a lot of the stuff that I've taught in my videos, which was inspired by his teachings, we want to see what next. We want to see that shift in market structure, and we want to see a fair value gap confirmation. So you can see right here, this is where you want to focus. See this right here? What is that? That's our fair value gap. That was the very first fair value gap that was created on that shift in market structure right there. So we want to mark that. We got it on the 5 minute, so there's no reason to go any lower at that point. See that? There's your fair value gap. See how there's nothing but candle in there? The top of the first, the bottom of the third, they don't touch. Nothing but candle. That is in imbalance. And see how it broke this swing high level right here? And also it's worth noting, note how that swing high level is inside that imbalance. I want you to think about the series that I made on support and resistance. What did I tell you guys? Whenever you have a level like that, inside of an imbalance, it's a very sensitive price point. It's a very sensitive level of support. So think about everything that's lining up on this play thus far. The fact that the higher time frame market structure is bullish. The fact that we traded down to a discount marketplace. The fact that we tested a higher time frame level. The fact that we have a smaller time frame shift in market structure. And then the fact that we have this smaller time frame level of support inside the fair value gap. I mean, check, 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 check. We got so many things checking off the list here, right? And then what did price do? What do we want to? What do we want next? Do we want to grab prices just ripping up like this? No, we want to wait for it to pull back into a discount marketplace. Okay, the same deal. Like right here, we had price on the higher time frame pull back into a discount within that price range. Follow my cursor. Within that, see that big leg up right there? There's our higher time frame price range, just displayed on a 5 minute chart now. And then see how price pulled back into a discount within that price range, aka below 50% equilibrium. We wait for that same exact thing on our smaller time frame chart. It did it right here on this leg lower. Okay, see that? Inside of our imbalance, tested a smaller time frame level of support right there. Take your Fibonacci. Did it tap below 50% equilibrium of that price range? It sure did right there. And notice what smack is it on? It's right smack on our level. See that? It came down 50% equilibrium inside of that imbalance, tested your level of support, and look at that rocket up off that level. So where would your stop be on something like this? So say you grab the play. So you grab this off this level of support right here. Where would your stop be? Well, you have a few options. You could put it underneath the fair value gap right here. Okay, 1, 2, 3 candles make your fair value gap. You could put it underneath of that first candle right there. That would be okay, a good stop. That would be a valid stop out point. You are playing that market structure. Or if you want to be safer, you want to give it a little bit more wiggle room, this is your next point. Those are your 2 points to keep a stop underneath this swing level. So like the very bottom it found, once it found support off of that higher time frame level, you could put your stop right below that. Or it's also a valid stop out point to put it below the fair value gap right there. Those are your 2 areas that you have available to keep your stop with that strategy. Okay, what about for a PT? How would we go about taking a PT? So PT, it's really up to you. We all have different ways of playing it. Some of us like to take profits quicker. Some of us like to let profits run. You could hold, I mean, heck, you could hold all the way up to this if you wanted to. That would be a valid PT. Why was it a valid PT? Because it's within the market structure. Okay, you could shoot for that. You would be trading with the trend. We do got relative equal highs right here. So there's nothing wrong with that. Maybe you want to leave in like a partial and maybe let something run up there, or maybe you want to let everything run up there. There's like no one correct way to do it. It's really about what fits you. Okay, because I mean, just think about you could do that, because think about the risk reward on something like that. I mean, let's just do it real quick. Let's see how much. So like, say for example, let's say you jumped in off that level, right? Let's put it right here. And let's say you keep your stop beneath the fair value gap. What is that? That's 5 handles. So that is 5 handles that you're risking. Your risk is 5 handles. And how much is that? I mean, that's freaking 45 handles. That's 45 handles. I know some of you are thinking, oh, this is just straight up cherry picking, right? I'm showing you the potential, and this stuff repeats. This stuff repeats. I mean, it's the same price. Is the same exact stuff week in, week out, day in, day out. It's the same exact stuff, and that's the potential when you wait for like higher time frame levels of support, when you wait for good higher time frame levels of support, when you wait for price to trade down into a higher time frame discount, when you utilize your smaller time frame confirmations during key times. Some of you might be thinking, because I actually saw somebody in Discord say this would have been nice if it was during a kill zone. Well, think about, we're talking about futures here. We're talking about futures here. We're not talking about Forex. Because I'm not sure your strategy in particular. Forex for me, I do 7 to 11. This is ES, this is in Forex, okay? When did this happen? That traded down to that level at 3:30 p.m. Eastern time. That is a very volatile time, extremely volatile time, okay? The open is very volatile, and right before the close is very volatile. That's still a key time right there when we're dealing with equities. That is a setup right there, okay? It wasn't in the morning, it was in the afternoon. That's still a setup, because it's a very volatile time, and that's key. That's the point of like kill zones and all that, is to stick with the most volatile times, to stick where price is most active. That's a very active time to trade. That's where it's set up for you. So again, you could have held out for that. Maybe you locked in something at like say 5 pips, gave you a 1-to-1. So say you might have locked in something at 5 pips, moved your stop up, and then maybe took some more once it cleaned out these buy stops, and then maybe some more right here, and then you held out for your final objective, which would have been right here at the high. You could have done it like that. Maybe you just want to take everything at 1-to-1. You could have did that. I mean, see, there's just so many different ways to play it in regards to how you want to hold PT. I can't tell you to do, like, you gotta do what works for you. You gotta experiment around and do what works for you, right? I mean, that's the potential of what you can milk off. They're not gonna happen every day. Okay, don't come into the market thinking you're going to get setups like this every day. Okay, it's not going to happen. It's not going to happen. You'll get a few every month. You might get one a week, possibly, but no promises. But you'll get a few every month where you'll have plays off of higher time frame levels like this, and then you can utilize that smaller time frame if you want to get a more precise entry. Just go through my YouTube. This isn't the first time this has happened. For the people that think I'm cherry picking, because I know there's going to be some that think that, but go through. I've done reviews on ES before where we've had higher time frame levels similar to this, similar plays to this. It repeats. Price is price. Price is the same exact signatures. Go test it. Go back test it. Go look at the data. It's the same exact crap. Same exact stuff. Are you going to be right all the time? Absolutely not. It could have broke that level right there, and it could have just flushed through low of day. That will happen too. That'll happen too. You're not going to have all winners, but think about it. You don't need all winners. Think about it. If you were to target these highs right here, if you were to target those highs, risking that low, I mean, look at that risk reward. Of course, you don't need to be right all the time. You don't need to be. I mean, if you're right like that, then think about how many, if you play like this particular strategy, this particular way, say if you were to hold out for that, think about how many losing trades that takes care of. And and also remember, you're playing the higher time frame trend. You're taking this off of a higher time frame level of support during a key time, during a volatile time. Price is traded down into a discount on your higher time frame. You have all these things checking off, and sometimes you're going to get the timing wrong. Sometimes it's going to pull the rug on you. It's going to stop you out. Don't let that discourage you, because you very well could still be right about the direction. I mean, my timing is off a lot. I get my timing off a lot. I don't sit there and beat myself up over it. I don't just switch my strategy up like a lot of people do. They take a few L's, then they lose their shit and they start switching everything up because they can't handle the pressure of it. You got to give your strategy time to play out, or you got to give the play time to, you got to be okay. Let me say it like this. You got to be okay with mistiming it. Okay. I know everybody wants to be super precise. They want to win all the time. They want to get it right all the time. They want to be so precise. You're going to mistime it. There's nothing wrong with that. You got to be okay with taking L's. There's nothing wrong with that, because if you manage your risk correctly, and like say for example, it didn't do this. Say for example, it came down, it cracked that low, you got stopped out, no problem. But then say right after that, after it ran your stops, you had another shift to the market structure to the upside. So you had another big shift. Okay, you can't go in next time thinking, oh, I don't know about it. It already faked me out once. I don't know about this play. You've lost your confidence. You lost your trust in it. And what's likely going to happen? It's going to be the one that goes, and that one trade that goes would have took care of your win, and it would have got you some profit on top of it. You can't play scared. You can't play scared, okay? Because again, one trade waiting for higher time frame level, waiting for higher time frame discount, that'll take care of several losing trades. But are you patient enough? That's the question. That's the real question, because most people, and I got to be brutally honest, most people that are watching this or listening to this, they're not at that point. They're not going to be able to wait for higher time frame levels. If you can, if you're patient enough, you manage your risk well, you can make a living just by trading ES, waiting for like higher time frame levels. You can make a living just by waiting for those levels. Higher time frame levels, what do I mean? 4 hour and up. I don't even really look at the weekly that much. Okay, I'll look at I'll keep an eye, see like where the next key liquidities pools are, but major analysis, most of the analysis, daily 4 hour. Wait for like daily 4 hour levels, okay? Daily 4 hour levels, wait for price to trade down to a discount if you're buying, wait for it to test that level, wait for your reaction, wait for your lower time frame confirmation, get in, target the next key liquidity pool. It is that simple. Manage risk. It's that simple. But simple and easy. Simple and easy, guys, is two different things. They're two different things. Okay? Because most people, they're not at the point, they're not going to have the patience to do that. They won't admit it to themselves, but a lot of people just want that dopamine hit. Okay, they're not getting it from their everyday lives. They have a lot of people, they have very boring lives. They wake up, they go to work, and then they use the market as a ways to get that excitement. But a lot of people aren't going to admit that to themselves. So something like this, for example, like when I say you might get a few setups a month or maybe one a week, most people, they can't get themselves to do that. It's unacceptable because they need that excitement. They're not here to make money. They're here for dopamine hits. But again, if you can do it, if you got it, if you can get yourself to that point where you wait for higher time frame levels, higher time frame structure, you wait for your lower time frame confirmation, fair value gap, really strong move during kill zones, key times, you could absolutely clean up. Because guess what? Most people, they don't got the patience to do that. Patience is an edge because most people don't got it. And if you can exercise enough patience to wait for setups like this, you can be at the top of this game.